Just shy of his 100th birthday, Charlie Munger just did his very first podcast interview with the Acquired Podcasts. It is a great interview, and it comes across that Charlie Munger is just absolutely in love with Costco. It's not hard to see why. I mean, since he's been a director of Costco since 1997, the stock is up over 6,300%. But that's just the financial gain that you've seen in the stock since then over that multi-decade perspective. There's a lot of qualitative reasons why. So if I want to get a quick understanding of, well, what makes it a quality business, I go to AI Ticker Chat, leveraging artificial intelligence to analyze the 10K. Let's click on the annual report, ask what makes Costco an exceptional business. Within a few seconds, it gives you an answer. Its unique business model, talking about the membership warehouse fixed fee sort of subscription business model. It's high quality products at low prices. We'll talk more about that in just a second. Focusing on customer service, talking about competitive wages and excellent benefits where they have lower employee turnover because people just love their jobs. They love getting paid above average salaries, getting the responsibilities, and thus having less employee turnover, saying, look, this is great. I'm being paid fairly. And then also their private label Kirkland brand is known for high quality at fair or below average prices, below the national brands. And so this is just, there's a lot of different reasons why why consumers love it and why investors love it as well. When you're looking at the underlying financials, it jumps out as well. You look at last year, Costco had around $8 billion in operating profit on $242 billion in sales. So razor thin profit margins, around 3% profit margins, over half of which comes from these membership fees, which is around $4.6 billion. So think about it as over half of their business is effectively this recurring revenue, business. Whereas the other half comes from the very small markup that you actually get on the merchandise, where they show net sales of around $237 billion. So that's the merchandise inventory that they're selling, with merchandise costs of around $213 billion. So you're talking about a markup in terms of their sales of only around 12% on average. Now, it might skew a little bit higher than that when you factor in that there are some things that are probably even below that are loss leaders, or that they're just sort of passing it through, maybe like, gasoline sales and things like that. So overall, you're talking about a markup that's only 10 to 20% above Costco's, wholesale cost perspective. So you're looking at this, and this is the reason why they win, why consumers keep going back, is that no one else has this type of razor thin margin model that they can operate and continue to take share year after year, as they're growing. And, Munger elaborated in this podcast, talking about some of the qualitative elements, the quality that makes this company so exceptional. And he talks about, one aspect is wide parking, saying, hey, you need to recognize you're talking about management that wanted to look for quality locations where there are rich people that want to find compelling bargains, they want to save money, and they also don't want to have the hassle of like, oh my goodness, I can't find a parking spot. And sometimes it is crazy at Costco where there's so many people there, but they purposely don't, cut out on the parking spaces. They purposely set it a minimum distance, something like 10 feet as opposed to 8 feet, or other parking lots will squeeze it tight. So it's quality throughout the whole change, throughout the whole experience, where you're getting a parking spot where you can actually fit and, bring your cart and, easily load your car up with items. And then you're going to follow and get quality items that you can, you get your $1.50 hot dog, or, buying favorable goods at a very low markup. So it's quality across the whole range of experience. And you look at the financials, and this is, also Munger's key concept, is that these are exceptional financials. And here's a key riddle for you to think about before I give the answer in the next 5 seconds, is in the last 2 years, sales for Costco have increased by $46 billion. How much has Costco had to invest net of inventory? How much do you think? Because typically when you're thinking of a business and you're thinking about the return on invested capital, you're getting, okay, well, how much do I actually need to go into this business to expand it? Now, I'm not going to talk about, the billions of dollars that they're investing into new stores. That's clearly an investment that they need to make. But how much needs to get invested net into inventory to expand by $46 billion? And the answer is nearly zero when you look at, what they've effectively invested in over the last few years. And you can see that, and this is by looking at the cash flow statement. And for those that are interested in learning more how to, read cash flow statements or, think about valuing businesses, I do offer, courses you can see below. And you can see just it's nearly zero over the last few years in terms of the amount of money that's being invested when you're looking at inventories and accounts payable. It really is incredible at what's been done over the last few years and how this business operates. So the question is, where does Costco go from here? First of all, in full disclosure, this is not financial advice. Also, if you're looking to take charge of your investment journey, consider unrivaledinvesting.com for compelling investment ideas, real-time portfolio updates, and our exclusive Discord server available for premium annual subscribers. So when you think about Costco, and you might still be wondering, well, wait a second, Daniel, how is it that the inventory issue that I just brought up, like how come it's so close to zero when they're able to expand so much? Well, it's all based on the timing of paying your vendors. So Costco has such a relationship where they're saying, hey, we will pay you after we effectively make the sale on it. And so that timing of which is the reason why you haven't seen this huge investment in inventory in terms of the actual cash, despite their sales growing significantly over time. But in terms of thinking about where does Costco go from here? We've covered a lot of the quality. You've seen the financials. Then the question is, well, is now the time to buy? Is a compelling time? And he added, from this podcast, he goes, the whole trick is to get them. And he's talking about exceptional companies on the few rare occasions when they're really cheap. But buying Costco at its current price, it may work out all right, but it's getting hard. And it's not, it's not hard to disagree with him. He's fundamentally talking about this concept that every time you look at a stock, and I see people make this mistake over and over again, they fall in love with the quality. They fall in love with one aspect of a business. Oh, I love this CEO. Oh, I love this, the business. I love the recurring nature of their business. I love the free cash flow, the quality, what have you. You're focusing on the fundamentals, which is important. That's the focus of my channel. I'm trying to find exceptional, unrivaled businesses. And I think Costco does go into that unrivaled camp. There are very, very, very few businesses that are of their caliber. You got the quality. But to Munger's point, you also need to factor in value. And so for everyone that goes, rah, I'm going to buy more Costco, are you actually thinking about the valuation? Because to Munger's point, you could have great fundamentals. You can have great growth. But if it's offset by, let's say, compressing valuation over time, you could see the stock go nowhere, as it has recently over the last 2 years or so. And more too, on the point of valuation, look at where it currently trades. And this is price to earnings multiple for Costco. You could see historically, before the zero interest rate policy of the last, let's say, decade, you could see it trade at a teens valuation. At one point during the great financial crisis, it was trading at a low teens multiple. But for a while, it was easily trading from, let's say, 17 times, 20 times, 25 times. Historically, you could have seen it. Now it's trading closer to 35, 40 times, closer to 35 on a free cash flow basis, 40 times on an earnings. This is not cheap. This is not cheap for a company that's growing, let's say, 5, 10% a year. It's quality. Everyone knows it's quality. The problem is that the valuation is baking it in. It's baking in continued strong growth in the years ahead. So how do you perform over time? Well, even Charlie Munger with the Daily Journal, which he oversees, it's not like he bought Costco for it. He's bought, a couple of banks like Wells Fargo, Bank of America, Alibaba, US Bank. So, really he himself isn't putting more capital to work in Costco. When I check in with AI Ticker Chat, which now covers all US companies above $300 million market cap using their AI Predict feature. So to try to get an assessment of where does the stock go in the years ahead. And this gives a range, thinking about what's the sales growth, what's the operating margins, what's the multiple in the years ahead. And this is very much aligned with how I would personally think about this, which is that in a best case scenario where you're growing faster than you've been growing for most years, so on average, let's say 13% over the next 5 years, and you have record margins of 3.6%, and you have a near record multiple of 35 times, then you have less than 100% upside. Whereas if you have anything less than that, then you're really talking about close to break even over the next few years, maybe a little bit better because the cash flow is actually going to go to you as a shareholder. So you get a couple percent, maybe 2-3%, in terms of a cash yield via buybacks and dividends that you could get. But overall, not super compelling return. And I think this gets back to Munger's key point, which is that, you need to focus on quality. Quality is super important, but you also need to factor in value. You need to weigh both of those elements. And it's not like it's super cheap right now. And I think this is a point about U.S. equities in general, is that there aren't a lot of things that are super compelling right now. You can find some things off the beaten path where you go, wow, that's a weird, here's a Canadian pharmaceutical trading at 10 times free cash flow. Here's a Brazilian payment company growing at 30%, trading at 12 times earnings. So you can find these things. I personally call out these sort of obscure, companies that I'm personally buying to my subscribers at unrivaledinvesting.com. But look, everyone's going to have their own different type of investment journey that you need to follow. I saved this channel for covering the things, Unrivaled Investing YouTube channel, for covering the ideas that people are broadly interested in, like Costco. That's a name that people often ask about, or it's a a business that a lot of people shop at and are aware of. But it's so important to balance that quality versus value dynamic. And here you really got that rich value, really got a lot of quality, and it's going to be tough, as Charlie Munger alluded to. I hope this video has been helpful for you. If so, please make a point of hitting that thumbs up, hit that subscribe button. You've been watching Unrivaled Investing.